Chieh, this is the issue. Everything is very, very volatile right now. We don't know where the consumer is going. We don't know what the input story is going to look like. How are you managing it from your business's point of view?
Yeah, Guy, it's a pretty wild time in the industry today. The good thing about food industry is that it's not discretionary spending. People have to spend. People have to have toilet paper. People have to have food on the table every single day, every single night. So with that said, what you're seeing is actually puts and takes. So consumers trading up in terms of quantity, potentially buying in bulk. I know it's self-serving, but that's what we do. But also trading down as well to hard discounters, to dollar stores. When you look traditionally at the data, that's really what's happened during recessionary times or during inflationary times.
Do you have a sense of if people are buying anything specifically differently? I understand kind of buying in bulk or buying on the cheap, but in terms of what they're buying, is that shifting?
Yeah, we're starting to see a little bit of a shift towards private brands. You're starting to see that, I guess, industry-wide. So that private brand that you might have skipped over when inflation wasn't so robust and also when the economy was potentially a little bit better, now you're taking a second look to say, hey, you know what, if it's a commodity product, can I save $5 this week or this month on it? Why not? A lot of the private brand items that we sell and everyone sells are much better in quality these days.
So what are you actually seeing? What is the consumer doing right now? We had some data out at the top of the hour that suggested that the consumer is feeling significantly less optimistic. What is happening already? Is this a kind of an idea for the future that people are going to trade down and do that as they react to these higher prices, or are they doing it right now?
I would say there's two data points I can give you guys. So one is, we just announced earnings this past week where we showed actually AOV, our average order value, was up over 16% year over year. So that's not just on prices, but that's on units sold as well. So folks coming in, consolidating trips and actually buying up and buying a bigger basket to potentially save on that transportation cost. The second thing that we're starting to see is actually the click-through rates and actually how consumers are responding to, I guess, re-engagement advertising or re-engagement emails or re-engagement push notifications. It's going up when the messaging is right, when you're talking about inflation, when you're talking about gas. This is very much the zeitgeist for everyone today, and you're seeing that in the click-through rates.
That's quite interesting, Chieh. I wonder how sticky you feel like these changes for consumers are. Let me just take the other side of this. Let's pretend that all of a sudden inflation actually comes down quickly, or the Fed actually works in destroying inflation expectations to some extent. How quickly do you think consumers are going to go back to old spending habits?
I can only speak on behalf of the data, Alex. And so what we've been seeing throughout the pandemic is that, of course, there was a huge spike in 2020, 2021. 2022, we saw a regression back to the mean. So folks are spending as if it was pre-COVID days. And we thought that was a good thing because we have a very sticky user base. What's interesting, I know it's not the topic du jour today, but our B2B business, people are spending even more. So that's also something to keep an eye out on as the world opens up. Yes, there's puts and takes of sometimes, with inflation going up, but also offices returning back to normal. That business was up over 65% for us last quarter.
Chieh, do you think as people buy bigger baskets, the delivery time becomes less important? We've been, for the last few years, progressing towards faster and faster delivery. Does that now go in reverse?
For certain categories, I think you definitely want things if it's, tiny pantry items that you needed yesterday. Yes, definitely you're going to see 20-minute delivery. That's a really great service for a certain amount of categories out there. I love that you asked that question, Guy, because it's almost as if you're in our kind of management meetings because we debate that all the time. And the reality is when we survey our customers, 70% of whom are out in deep suburbs or rural America. No one's saying I need a 48-pack of toilet paper in the next 10 minutes. These are folks that are planning. These are folks that are stocking up their pantries. So there isn't that pressing of a need that they needed in 15 to 20 minutes.
Also, real estate is anything to say about it. If everyone moved out of cities and into big houses, they actually have space. I can't imagine storing that in my New York City apartment.
I was going to say...
Chieh, I have a question for you, though, about how you're running the business in terms of your visibility. There is so much uncertainty. Margins across the board are coming under pressure in general for different industries. How confident are you in your ability to make investment decisions right now?
I would say confident in the sense that we know what we can control. So at the end of the day, there's a lot of things out of our control, but execution on the factors that we can control are really important. So again, talking about data or actual action items. So one is definitely, we just announced yesterday our brand new kind of or extended partnership with FedEx. So being able to really leverage their network to provide 7-day service and potentially even some margin gains. That's something we can control, and that's something the management team here executed on. The second thing is actually when you look at kind of overall service levels for the consumer, and also the products that we sell, keeping things on stock, in stock, and making sure that they're delivered in full. It's something well within our control. So investing in more fulfillment center capacity, investing in relationships like FedEx, give us the confidence that I think we're investing in the right way.
In terms of what's happening with labor, just one final quick question. How much are you investing in robotics right now? Is the increasing wage story that we're seeing right now encouraging you to do that more? And if you want to do that more, is there capacity within the industrial side to be able to build the robotics that you need?
So I love that you asked that question, because I think it highlights the fact that we build our own robotics. So remember, of course, we sell toilet paper and Oreo cookies, but we also sell software and the entire end-to-end technology that powers our entire business. So on the robotics side, we actually have hardware engineers. So the newest fulfillment centers that we have, those robotics are actually engineered, built, and manufactured by us. So we do have the capacity to build more. But a lot of the third-party robotics providers, there's a long backlog. If you want to automate your fulfillment center now, you're going to get in line. So it's not just going to be months. Sometimes it's years of a waiting list for the key technologies there.